Hey guys, here's the way I see it with the stock market. I think the tech stocks, the ones I've been harping on for so long, the AI, semiconductor names, and other ones, big theme names, they are taking a break after we've had a huge rally, which I called yesterday. I said we're overbought right now and mission accomplished in our short-term trading accounts. We didn't need to do anything. We just wait for good opportunities, right? So you don't need to over trade. I know it's easy to, right? Because you get used to it every day. But now you got to wait for opportunities to come again. Come off of overbought levels, especially on the longer time horizons. Of course, if you're looking at the 1 minute time frame, it's going to hit 30 or less, right? That's for your in and out trades. And even the 5 minute could show that, okay? But if you want to make sure, if you're holding longer, like I said, like let's say you're swing trading now, then look at, the 4 hour, the 1 day, right? You can even look at the week, depending if you're going to hold longer than a week, okay? So just remember that that's where you want to look at RSI if you're planning on holding longer. So remember, shorter time frames, right? If you're getting in and out with your trade, so you can use the 1 minute and the 5 minute with the RSI. And then if you want to hold for the day, you can look at 15 minute, right? Another 4 hours you can look at. So that helps me. And hopefully that helps you as well. But anyways, the way I see it with the stock market right now is wait for good opportunities, which we're getting today. We were overbought, which, like I said yesterday, in like Upstart, for example, let's say you did buy the top on this stock. Let's say you bought at $54 a share. Okay, I know it went a little higher than that, but just using that as an example. And let's say, you're supposed to put your stop loss in. Remember, that's what I've taught you in the short-term trading account, no more than a 7% loss. So if you bought at 54 and let's say you set your stop loss at $50 a share, right around there would be about 7%. And then, or maybe like $50.50, whatever it is. If it got you out, perfect, because then you could have entered in today even lower, right at 47, 48, or even 49, and then you do it again. Okay, obviously when RSI was oversold, right, versus overbought. So RSI will help you out, get good entry points. So always look at that, guys. Get in the habit of doing that, okay? And like I've been saying, the VIX, if you bought when the VIX was at like 60 and you just kept buying as the VIX came down, you would have made a ton of money. And that's when I was saying the dollar cost average into Millionaire Maker portfolio is when the VIX spiked that high. Because if you look in history, every time the VIX spikes, it eventually comes back down and stocks go up. Remember, the VIX is the fear gauge. When the VIX is falling, stocks go up. When the VIX is going higher, stocks fall, right? So it's a good thing to look at as well. That with RSI, and that will treat you well. But hopefully you're seeing the big picture, making sure you have some of these good AI companies in your long-term portfolio, because now with Trump making deals left and right, even though I understand tariffs are still higher than they were before, it's all about sentiment, and people are going to chase this rally. It's just how it is. Institutions and hedge funds who are out of position, are still getting in. Remember, Monday was the day that they came out with the news, right, that they lowered tariffs. We're talking only 4 days ago, right? So it's still early, and now we're getting that pullback. So if you didn't get in, this is where you can buy a little bit at a time. Remember, don't put it all in at once ever. Get in the habit of doing that as well. It's dollar cost averaging. Let's say you want to put 1,000 in. You put 200 in at a time if you want, for example. Break it up. If normally you would do 500 at a time, do 200 at a time. So you have 5 separate purchases versus just 2. And that allows you, in case stocks go lower, you can add more, okay? So I like to do a slightly bigger block of shares. Each level it goes down. And obviously after this huge rally we got, even though we got a dip today, I would still keep it very small, okay, in case we want to go lower. We know it's headline news driven, but I do think we're going to chop higher, guys. And maybe we go back and retest the 200-day moving average, with the NASDAQ and the S&P, and then we bounce from there. But we're going to have a lot of deals. We saw Trump again with the United Arab Emirates. We're seeing deals with Qatar, while he's out in the Middle East right now. He's making deals left and right, and he's got the momentum going. We got this tax cut bill coming up. Interest rate cut talk can be on the table after PPI came in lighter than expected. So just see through the noise, the fear. There's still going to be people that are skeptical about this rally and that stock shouldn't be this high. They're overvalued. Yes, you can make that argument for sure. But with Saudi Arabia now spending all this money, that was the catalyst, the growth driver for me to have confidence, being in these names. And obviously long, I was going to be in them no matter what, 5+ years. But the short-term trading account, you can hold them a little bit longer. You can, put your stop loss a little lower because we have some momentum going up now. And like I said, some deals are being made on the tariff front, which remember was the whole reason stocks were falling to begin with, the fear and uncertainty over that. And yes, this is just a 90-day pause, right, where they're bringing them down, but I do believe they're going to get a deal done. And I just heard today that India is talking about 0 tariffs. So it's just going to be good news, you know, because you start high on tariffs and then anything is good news after that, right? Any progress where tariffs come down, even if it's a little bit, will look good, right, on paper. Even though Trump, we know, jacked up the tariffs just to bring them back down so he can look like a hero. Hey, you got to give it up for the guy. His plan, right, is working now. People are coming around. I know some of you will say no, and hey, I'm not in to get into political debate or anything like that, but I'm here to help us make money in the stock market regardless of what's going on. And right now, like I said, while stocks are still off their highs, I can see these slowly but surely getting back to all-time highs at some point this year. And I just want to make sure you guys are not buying then, right? I would rather have you buy on a dip like today and just hold through the volatility until we get back to all-time highs, okay? And obviously, I know it's painful when you say, oh, I could have been in at this way lower price. I knew I should have held, right? And it's easy to hate on the market and just wish it will come back down and say it's going to come back down, right? But then you can miss the whole thing. Trust me, I've been there before. So you got to put our emotions aside and trade what's in front of us, what is actually happening.